I think all of you must now remember that harvest pressure is no longer that relevant. I think farmers have understood that they need to hold on to crop to get the best returns, and which is why there is no real big rush to sell at the end of every harvest. I think you also need to track wheat prices for corn, because wheat and corn now are increasingly very, very close substitutes. And when wheat prices rise, they tend to pull up corn as well. I think you also need to look at some of the close substitutes that corn has, because that's how the starch and the paper industry moves in. Soya, the same thing. I mean, if you look at the cost of energy now, if you look at the cost of diesel, and you look at the cost of electricity, all of these have shot up amazingly in the last couple of years. It's now costing the farmer 23 to 24 rupees to grow 1 kilo of soya bean. And yet, soya acreage is growing. This year, our acreage has been a record acreage. Our crop is supposed to be 12.5 million tons, though some people are putting it at 11.7 million tons, because farmers see good money. And I think that's an extremely reassuring thing for your industry. Farmers, when they make money, it means that more land and more inputs will be brought into soya. The other thing which is supporting your sector is the fact that crushers need to continue crushing bean because they need the oil. As oil prices move up, beans continue to be crushed, and when beans are crushed, there is meal supply in the market. Again, in soybean meal, it's the export market which is calling the shots, because India commands a premium in the world soya market because it's not made from a genetically modified seed. It is very well located. We can supply the Southeast Asian market. We are able to cater to the entire market down from the Middle East up to Japan. And that is why India and the world price moves very closely in tandem. US, Brazil, and Argentina, these three, of course, as you know, control the soybean trade. So whatever happens in these markets, their production, their weather, their risks immediately impact your risks. China is the biggest buyer, so when China decides to stop buying beans, it affects the market. When China decides to build up its bean stocks and create a large reserve, it affects bean prices. Which is why soybean meal prices are now affected as much by meal as by soya. And what is moving soya oil? Soya oil is being moved by palm oil prices. It's being moved by the demand for biodiesel, which is rapeseed, and which goes into biodiesel. So as a substitute for rapeseed oil, soya oil moves in. Again, there's a lot of pressure from investors and punters who are putting money into the commodity markets, hoping to make money from agricultural crops. And of course, the dollar. The more India becomes, the more Indian rupee becomes weaker, we become more attractive to foreign buyers.